Cyber Trading University for giving me this opportunity to teach you about something that I am ever so passionate about, which is Elliott wave analysis. And hopefully today you'll take away something that you can use in your trading and supplement the strategies that you're learning with Cyber Trading University. Because Elliott wave is an overlay to your strategy. It's the analysis part of the equation. I'm going to start out by talking about some theory, and then we're going to move into live markets. And I actually just got back from China. I was presenting in China, and I'm going to show you the chart of the Shanghai stock market as well, so you can see what we're missing over here. It'll make you jealous. No, only kidding. So the topic for today is latching onto trends and Elliott wave solution with live market analysis. Let's get going. Please read the disclaimer to yourselves. And by the way, I think many of you are trading futures markets. I think you guys trade futures and stocks. And I'm going to be showing you the Forex markets on the Forex trading platforms, but it doesn't matter because Elliott wave analysis applies to every traded market. Just a little background about myself. I think that this might be a little bit interesting for you. I found this chart of the British pound, and this was my roots in foreign exchange for a New York investment bank. That's when I started in 1980, and I was the interbank trader for JP Morgan for that period in New York. And then I moved off the desk. They transferred me to Toronto, and I was a position taker. I held a number of roles. But trading as an interbank trader back then, the markets were totally different. We had squawk boxes, so the brokers shouted the prices through squawk boxes, and the volatility was huge because the currency markets at that time were in their infancy stages because they only became free markets with the Smithsonian Agreement in 1971. So the banks started to set up their trading rooms in the 1970s, and I joined in 1980. So it was quite a ride in more ways than one, and I've actually, I just wrote a book which is going to be published in August, and it gave me a lot of time to reflect on the time that I've spent trading the markets over these last, I'm going to say 30 years, but it's more than 30 years. So that's just a little segue into Elliott wave analysis. I used it back then, and I use it now. There isn't a day that goes by or a market that goes by which I don't analyze with my Elliott wave lenses. So I believe there are three pillars of trading success. One is the analysis, two is the strategy, three is the coaching and accountability. Without having one or more of these, it's like climbing up a mountain without climbing gear. I just strongly believe that a trader needs all three. Okay, so let's just break it into pieces, and let's just talk a little bit about Elliott wave analysis and Fibonacci and harmonics. We've now included harmonics in our trading, and Fibonacci is the link that ties Elliott and harmonics together because both analysis techniques are based on Fibonacci. So we use Fibonacci fairly heavily in our analysis. And of course, Elliott wave uses Fibonacci and harmonics uses Fibonacci. So it's all ties together, these analysis techniques. And the reason why we do analysis is in order to have a roadmap for our trades, to be able to look at the market and say, okay, what are the possibilities here? What am I looking for? Like, where am I driving? If you call it, I call it, you know, my GPS. Where am I driving to today or this week or this month? Without GPS, like, we can get lost. Well, so too, I believe, and that's just my belief, it's not everybody's belief, that just because I use it doesn't mean everybody else uses it. There are many successful traders who don't use it. So I just want to state that caveat. But Elliott wave analysis is like my roadmap. and it gives me the market context in order to increase the likelihood of successful outcomes. Because bottom line here is we need to increase the wins. Like, we need to increase the number of wins and the size of the wins. So that's what we've been working on, increasing really the size of the wins so that our risk reward is really in our favor, so that the size of our wins are bigger than the size of our losses. And the only way to do that, in my opinion, is to look at the bigger time frames and do a top-down approach. Second is the strategy. It's really important to have a highly effective strategy, and the strategy tells us, it's like the trading system. It tells us where we're going to enter the trade, what our stop loss is, and what our profit target is, to know when to trade and when to stay out of the market. And the whole thing about a trading strategy and writing out a trade plan is to remove our emotions, because our emotions just get in the way all the time, as you know. I mean, you all can attest to that. Nobody is immune from that. And the only thing that we can do is to try to be as objective as we can, even if we are discretionary traders, and plan our trades out and then follow our trades and not change our minds so much. And I can hear myself talking a lot about psychology because that's what my book is about. It's called The Trader's Pendulum, The 10 Habits of Successful Traders. And I've had to, read it over and over and over again for editing, and it's just, I guess, in the brain, so it's just coming out. All right, coaching and accountability. So it's also important to have a coach, and it's really good that you're in the, you have the trading rooms at Cyber Trading, and you can have a mentor, by your side, analyzing markets, showing what's going on. You need an expert to help you, especially if you're just starting out. And even if you're not just starting out, I know that in order to, successful traders are independent, and it's true, but it's really important to have like a trading community. So I'm sure you have a great trading community here, which will help you out in your trades. And the most important thing is you're speaking the same language. Like, you're all like-minded. You're speaking in the same language. You're looking at the same markets, and you can really help each other out. Because trading can be a lonely game, and I don't know if you've ever experienced that. I certainly have, when I set up a trading desk for a 2-year period and traded 20 different futures markets by myself. And this was my transition. This was after I left the bank, and like a little while after, I set up my own trading desk, and it was lonely. So now I love what I do. I'm part of a community. It's my community, and everybody speaks the same language, and it gives me really great joy to see traders succeed. So I do believe that you need to be accountable, and you need some coaching, and you have it here, so that's fantastic. All right. Ralph Nelson Elliott, how did he develop this theory? He studied various market indices over a 75-year period in the 1930s, and he discovered that stock markets traded in repetitive cycles, and that these cycles reflected the emotions of investors. And when I show you the Chinese stock market, it epitomizes this, that the cycles or waves reflect the emotions of investors. And that's how that's how he mapped out the 8-wave cycle. And the 8-wave cycle, which is in 2 slides from now, I guess, is the trend move and the counter trend move. So he poured over hundreds, thousands of stock market data, stock market charts when he was actually bedridden. He didn't even have a computer at the time, and came up with these patterns which hold true today. Now, I must say that Elliott wave analysis, as the markets become more mature, and depending on which market cycle we are in, sometimes it gets very challenging to label the waves. So what I do is I always go to the biggest time frame to get the biggest perspective, because that's the first perspective, that's the easiest perspective. And then if I'm on let's say an hourly chart and I don't have perspective, well, if I'm on a daily chart and I don't have perspective for day trading, you obviously have to go down to a smaller time frame. And because the market's patterns repeat themselves in every time frame, you want to really internalize these patterns and trade on the time frame where it just it becomes obvious to you. And I'll show you what I mean in just a minute. So Fibonacci, Leonardo Fibonacci discovered the Fibonacci sequence of numbers. And this is the sequence. All of the ratios come from this sequence. We use this sequence for everything. So when you take one number divided by the next number, you get 0.618. 55 divided by 89, 89 divided by 144. When you go backwards, 144 divided by 89, you get the inverse of 0.618, 1.618. So any number above 1 is an extension ratio or a projection. And we use that to project wave 3, wave 5, the projection ratios. Any number or ratio below 1 is a retracement ratio, and we use to calculate the retracements with those numbers or those ratios. So on the left we have the 8-wave cycle. It looks really, really complicated, but if you look at it closely, you see that it's nearly the same pattern is really repeating. So you have a 5-wave cycle and a 3-wave correction. And then if you go down, you have a 5-wave cycle and a 3-wave correction, a 5-wave cycle, a 3-wave correction, 5-wave cycle. And if you're into chart patterns, one of the biggest aha moments for me, like a long time ago actually, was recognizing that all of these standard technical analysis chart patterns can easily be described through Elliott wave analysis. Look at these market tops. What do you see here? Head and shoulders patterns. So you see head and shoulders patterns at every market top and every market bottom. So that was a big aha moment for me. And actually most of the technical analysis patterns can be described by Elliott wave patterns. The markets are fractal. This is the word that you need to know, and what it means is that similar patterns composed of smaller copies of themselves ad infinitum. The patterns repeat, and they repeat in nature, and they repeat in markets. You can just see the branches of the tree. If you look at the whole tree, that's a pattern, and then if you look at the branch, it's a smaller copy of the whole tree. And if you look at a twig, it's a smaller copy of the branch. So too in markets and in fractal images. These patterns are all based on Fibonacci. So here's a fractal image that is generated, and it's generated using the Fibonacci sequence and the ratios. Okay, here are patterns in the market, and once you learn the Elliott wave patterns, you just need to learn them and be able to apply them in whatever market you're trading, in whatever time frame you're trading. Okay. Now I want to just change course a little bit before I get into live markets and real wave counts, and I just want to prepare you and show you that even with the wave counts, it's a good idea to understand what the end of the trend means and how you can simplify your analysis to see the end of the trend. I'm going to give you a little 3-part strategy that you can begin using for your end of the trend analysis. So 3 things that a market can do. It can go up, go down, and go sideways. And this chart illustrates the fractal nature of the markets. And please just ignore the sound. I'm having work done in the house, and we can't avoid that noise. If you look at the red line, smooth, straight line here, you might consider that as a daily chart. And you might not be able to see the makeup of the waves. You won't see the makeup of the waves until you go down a time frame, maybe to the 4-hour, and then you'll see the makeup in green, and you'll see the 5-wave sequence unfolding. And then you go down to yet a smaller time frame, an hourly, and you see this wave unfolding into its 5-wave structure. So that really just means that whatever time frame you're trading, you will see the Elliott wave structure. And the other thing that I wanted to say about this is when I do a top-down analysis, I typically look at 3 time frames. So I typically look at, if I'm taking a position in the market, I'll typically look at the weekly and the daily, and then maybe take my trade off of the 4-hour. Okay? If I'm looking at swing, I will look at the daily and the 4-hour and take my trade off of the hourly. And if I'm looking at day trading, I still like to look at that daily chart. I still like to do that top-down approach, but I'll definitely focus on the hourly and take a trade off of a smaller time frame. So let's just talk about the end of the trend and what happens there. The market makes a low, and then it moves up, and it comes down, and at this point we're at the crossroads. The market can either make a new low, or it can start a new trend. The definition of trend is higher pivot highs and higher pivot lows. So once we take out this point here, the trend continues up. We have a new trend, higher highs and higher lows. So let's say you forecast your Elliott wave move here, and we'll show you 3 ways to do it. And then you want to wait for a confirmation. This is called the 1, 2, 3 reversal. And this is a confirmation that you can use to wait for the turnaround in the market. This is the 8-wave cycle again, set in a different way. And when we analyze the markets, we look at the starting point as point 0, the ending point as point T. And we're looking to trade the trends within. So we're looking to trade the pullbacks, always trading the pullbacks. And if we're in a wave 3, we're always looking to play the pullbacks in the wave 3. Always, always, always. And really my theory is that you should always stay in the trend, continue to buy the trend until you have that confirmation, because if you don't, then it's very easy to pick a top too soon. And then you're changing your brain. Your thinking is going to be, oh, okay, you're going to continue to look for the top of the market, and you're going to miss the process of getting there. And the process of getting there is the trend itself. So just for trade, in terms of trading styles, you can be a scalper, momentum trader, day trader, swing trader, position taker. What I tell my students is that if you can make 200 to 400 pips a month, no matter what style you're using, and then use your money management to your advantage to really make the money, then you don't need to make much more than that. When people tell me they make thousands of pips, wow, I mean, that's incredible. Like, that's just not my style, but you can make some decent money making this amount of pips as long as you manage your money and manage your risk properly. So for a momentum trader, you're looking to make 10 to 20 pips a day, and that adds up to your 200 to 400. For day trading, 20 to 50 pips a week, and that adds up to your 200 to 400. For your swing, 50 to 100 pips. Oh, no, sorry. This is a week, and this is, a day, right? Or every couple of days. And then for position taking, 200 to 400 pips a month. Like, it might just be that you take a few good positions to get that. All right, let's talk about the end of the trend and 3 things that can help you in determining the end of the trend. Divergence, trendline break, and 1, 2, 3 reversal. Those are the 3 things. So divergence is, if we just look at this piece right over here, is when the price makes a new high and then the oscillator doesn't. This is a MACD. So we have a lower peak in the MACD. This is called divergence. It tells us that the market is running out of steam. If you combine that with a trendline break, so here's the red line with a trendline break, then that's the second thing that you want to look for. Otherwise, the market can continue to move higher. And then finally, the third thing is a 1, 2, 3 reversal. And the 1, 2, 3 reversal happens in conjunction with the trend line break and divergence. Now, then we have a new trend. So what I always recommend traders do is to draw their trend lines and channels, because Elliott wave cycles typically work within channels. So you can see a sequence within a channel, and it's only when we break through that channel and that when we use our three-step methodology that we're looking at a trend change. And that can be either a correction of this, or it can be correction. We haven't even talked about that yet. Let's get to the wave counts, and we'll spend more time on the nitty-gritty. So on this side of the chart, we have divergence, right? Price makes a new low, and the MACD makes a higher low. Trend line break, and 1, 2, 3 reversal. Here's another example. Now, this is the Canadian dollar. It's an older chart. Trend reversals occur at market tops and bottoms after a sideways move. Do we know at this point that the market is going to trade higher or lower? What do you think? I mean, it could go either way, right? It could go up or it could go down. You really don't know, do you? So we have our first clue. We have our divergence. Now let's look at the next slide and see what happens. Well, we have our trend line break. We have our trend line break. So we really don't know. This is the, if you take a position here because you're buying at trend line support, and that's fine. But if you wait for confirmation, then, oh, sorry, hold on a second. Let me just close that up. Okay. If you wait for confirmation, then you will see that with the divergence, okay, and with the trend line break, and with the 1, 2, 3 reversal, we have a change in trend. So this is just a way to confirm. Now, if we go a little further with this, we have the same thing over here. I mean, we're drawing our channel lines. We're drawing, this is a daily chart. We're drawing our channels, but we're not seeing the right side of the chart yet. We're just right here at this circle. And I don't have the divergence here, but I'm sure we have divergence. And then we have the trend line break and the 1, 2, 3 reversal. The 1, 2, 3 reversal triggers right at this red line. So this is something that you can take a look at on your charts, and it's just you don't have to have an Elliott wave counting background for this. This is just logical, but just know that Elliott wave patterns trade within channels. That's one of the things that we studied. The other thing that I just want to introduce, the other thing that we look at are harmonic patterns at turning points. And here we have a nice harmonic pattern at this turning point. And that's sort of the icing on the cake. Just it helps us in our Elliott wave counts to pinpoint tops of the markets, and we find harmonic patterns at the top of the markets at reversal points. So now we have reversal candlestick patterns also, 1, 2, 3 reversals and harmonic patterns. So we've just introduced two new things. 1, the divergence. 2, the trend line break. 3, the 1, 2, 3 reversal. 4, reversal candlestick patterns, and 5 harmonics. This can be like a little trade plan for you. I'm not getting into the details of this because, you can take a whole course on this, of course. But it's for further study. All right. Let's talk about some live markets now, and we'll look at some wave counts. All right, this is the dollar Canada, and we color code all of our wave counts. We color code it based on the colors of a rainbow, Roy G. Biv. So suffice it to say, that's all I want to say, but that's what we do. We color code it. So this is telling us, this is a daily, this is telling us that we are in a wave 5 of this wave 3. So we're expecting this to move higher, the dollar Canada. Now, is this wave 2 complete yet? Let me just explain something about the waves. Let's look at this piece in here. Okay, we have 1, 2, 3, 4, 5. Let's just talk a little bit about the wave personalities from looking at this. At the beginning of the market turn, traders are still bearish at this point. Like, they're still bearish. They're not looking, there's no major clue that we are really going to accelerate higher. Okay, but that's except for what we showed you with the channeling and the 3 points to look at. But the nature of a wave 1 is that it's slow, it's sluggish, because there's no real clue about a turning point. And then we have wave 2, and usually wave 2s are steep. In this case, it's not steep, but sometimes wave 2s are steep because the market is still not sure that we have turned around yet. And then, so here's wave 1. We have subwaves in here. Let's just look at the circled 5-wave sequence. So wave 1, wave 2. Then wave 3 has its own personality of its own. You can tell a wave 3 because wave 3 moves are very steep and they're powerful. And the corrections are very shallow in a wave 3. So this is definitely has the personality of a wave 3. And then the wave 4 personality is chop. It's very easy to get chopped up and to get whipsawed during wave 4. And then wave 5 completes the move. And sometimes wave 5 double tops with the wave 3, especially in Forex. It happens quite often, less so in commodities. So wave 5 double tops. And then we start the correction. And we have our correction. So once the correction is complete, then we move up in another trend cycle, and that's the cycle that we're in now. And I'm going to show you oil after we look at the dollar Canada, because oil is showing the mirror image of this picture in the US dollar Canada. And you shouldn't be surprised at that because Canada has a lot of oil and exports oil. So when the price of oil drops, as it has done, that's really what started the move up in the US dollar Canada, or the weakness in the Canadian dollar. So if you're trading Canada, you need to look at oil as well. And also, what I discovered from my studies before going to China, very interesting, oil played a major role in the stock market when the stock market turned around, because China too imports oil, and it reduced with the prices coming down. It removed like $600 million a day from their budget. So it was pretty bullish for China when oil came down. And I don't have the chart, but I showed them the chart of oil versus the Shanghai index, and there was a direct inverse correlation. It was incredible. So it's important to look at commodities. And the other thing is, China traded gold very heavily. So I'm going to show you at the end, when I show you the stock index, the Shanghai index, and gold also, what I learned from my visit there is that because the stock market is performing so well, they've sort of cooled off on their gold trading. And when we look at gold, it's no surprise that gold has traded sideways since the China stock market has rallied over the last year. By the way, the Shanghai Composite Index is up over 150% in the last year. 150%, if you can imagine that. All right, I diverged. Let's look at the smaller time frame in the dollar Canada. This is the daily. Let's look at the 4-hour. This is our top-down approach. So now we have our perspective that we have to wait to see for this, the wave 2 completing. Okay, we have to wait for a turnaround in the wave 2. So let's move down to the 4-hour, and let's break down the wave 2 into its wave count, A, B, C. Now, for a wave A and a wave B and a wave C is always a 5-wave move. Okay, and we don't know if this wave C is complete yet from this time frame. It could be that it's not complete and that this is just a wave 4 and we have one more move down for the wave C. Okay, so what we can do, now look, we have the channels here and we had a trend line break. Let's see if we come back down within and wait for our 1, 2, 3 pattern here to trigger the trade. So let's look at the hourly chart. And this is what we do. We just go down the time frames. And on the hourly chart, it could be that this wave 2 is complete, and we don't know yet. And the way one of our confirmations is that we want to see a 5-wave move up in the direction of trend, the new trend, followed by a 3-wave sequence. And here, if we count 1, 2, 3, 4, 5, if we sort of have a 5-wave sequence, but it also looks like a 3-wave move to me, A, B, C, which means that we may come down a bit more. And then, in other words, we're not ready to move up from here. So we have to wait and see on this one. But let's look at oil to see if we see the mirror, the opposite image on oil. This is the NYMEX crude, and this is exactly the same pattern where we've labeled it a wave 4, and we're ready to start another move down. So here's the 4, here's the 1, it's a short one, and a very long sideways move, and which doesn't look like it has completed yet. Okay, it looks like we have one more move up because it looks like we have done 1, 2, 3, ABC 4, and we have one more move up for oil, and then that should be it, and then we should turn around and come down. And it could be that dollar Canada has the same reaction. That's why I'm leaning towards another move down in the dollar Canada before it turns around. So that's oil. And what do we have here? The euro. Okay, the euro has been very interesting. This is kind of messy with all these wave counts on here. Last time I was going to speak to you, I was going to tell you that the euro was going to go up to 114. Okay, and where were we? We were not anywhere near there. We hadn't broken through 110 yet, and that was our projection. So I was all excited. I got my charts ready to show you that we were going to go up here. Well, we got there, and now this is a very, very complex correction. Just the way we're labeling this is a wave 4 magenta, and we're still in this complex correction. And the way correction works is this. A correction is a series of 3s and linked by 3 waves. It's a lot of 3-wave moves. So here we have, I can't even, let's see what we have. We have WXY, and whenever you use W's, X's, and Y's, it just means that we have 2 corrective patterns linked together. So a W is 2 corrections linked together. And then the X is also WXY, but everything is moving in 3s. So we have 3 waves up, 3 waves down. And then we have A, B, C. So we are projecting that the euro isn't quite ready yet to sell off, and we are anticipating another move higher, but I would rather wait for the euro to move up and then look to strategize at these, higher levels, and maybe look to sell it again, just because, yeah, I mean, that's That's what I would rather do. But according to our wave count, we have still more room on the upside. That's the daily. So now let's look at the 4-hour chart. We're in this, let's go back to the daily. Let's focus in on the A, B, C, on the C leg here, the C leg. So here we have the A, the B. Let's focus in on the C leg. We have the red and then the orange counts. 1, 2, 3, 4, 5. It's very messy. It's very choppy, as you can see, but we're counting it like this. And we're counting it. We move down to another time frame, 1, 2, and then 3, 4, 5 to complete this sequence. So as long as price stays above this low here, actually this low here, we can still stay bullish. All right, that's our line in the sand right here based on this wave count, because we've labeled this the start of the wave 5. And price can't go below the start of the wave 5. Wave 2 cannot go below the start of wave 1. That's one of the rules of Elliott wave analysis. So now let's focus on this orange wave 5, and let's move down to the hourly chart and see what we have here. So we have the orange 4, and the same thing. We've labeled it a 1, 2, 3, 4, 5. We have a nice 5-wave pattern here off the lows, and this is a nice corrective A, B, C for the wave 2, and these are the targets for the wave 2. So you can draw, this is the hourly, you can draw your channels, and you can move to a smaller time frame if you want, and look for divergence in this piece here, and then look for your trend line break and your 1, 2, 3 reversal. So that's our euro. Let's see what we have next. The S&P. This is a mess. This is a real mess. For those of you that are trading this, I just don't know how you're trading this. We're labeling this, but and catching some moves. But this to me is a real mess and choppy. You can see the wave counts. There's a lot of overlap. Even though the market has moved up, it looks very corrective. You can tell when a market is corrective. You should be able to develop that feel for when a market is corrective and when a market is in a clean trend. And on this time frame, it is very choppy and corrective. And I would say that in order to trade this, you have to go down to the smaller time frames to see if you could see a better trend on the smaller time frames. But I'm going to contrast this with the China index and tell you that there are other, if something isn't clear, then just move on. There are many trains leaving the station. You don't have to trade this. And I know that the S&P is, I think everybody likes to trade the E-mini, etc. And some of you might. I don't know, but it's challenging from an Elliott wave perspective. However, let's just tell you what our view is. Our view is that we should break down, okay? But we won't have that confirmation unless we go below this wave 1. That would be our 1, 2, 3 pattern. So I don't know what the exact level is, 2070. Let's move down to the 4-hour to see something here. And then we would target a 5-wave move down for a wave C. And I mean, that's bold of me to say that we are going down, because it's not very clear. Okay? Looking at the hourly time frame, it's just not very clear. Look at this. Even the supposed trend down is not very trend looking. So even though we're labeling it like this, I don't have a whole lot of confidence in this. I'm sorry, I just don't, because it's just not the best layout that I would want to see for a clean trend in the opposite direction, if that's what we're calling for. All right, now Gold. Remember I told you that gold has been trading sideways? This is the daily. Well, you know what gold has been doing. It's really been trading sideways for the last year, right? I mean, it pushed up, it pushed down, it pushed up, it's trading sideways. Naturally, we're counting it, we're labeling it, and we have had some nice moves in here. But I think part of the reason that there's no real big trend is because of the Chinese, because they're focused on, they were very big gold traders and oil traders as well. And now they're focused on the stock market. So let me show you the stock market. Look at this. This is the Shanghai Composite Index. And look at this. Okay? This has started to move up since oil started to move down. Like that, basically you can put oil. I had a chart. I should have put the oil on here. I forgot. It's just incredible. 150% in the last year. And that's just one of these indexes, the Shenzhen Index, which has a lot of smaller mid to mid-sized companies and different boards, has gone up over, I think, close to 200% in the last year. It's just unbelievable. So I think what I learned from looking at the Chinese markets is to I guess it just highlighted to me that you don't have, if a market isn't obvious and if it doesn't have a very clean Elliott wave count, or you can't overlay your strategy on it and see your trades clearly, it's better to stay out of that market and look for the high probability markets. I'm not telling you to go trading this market. I mean, a lot of people are now speaking that there's a bubble and it's ridiculous, but I'm looking at this, and while I want to say it's a bubble, I also see that the PBOC, the Central Bank of China, is adding liquidity, and it's a similar situation to what the U.S. went through. They're lowering interest rates and they're providing stimulus. Chinese economic growth is the slowest in like 25 years. It's 7%, if you can imagine, the slowest. And they're pumping liquidity in the system. So that's causing a lot of speculation, and this is a wave 3. This is the characteristic of a wave 3. So when I was in China twice this year. I was there in December when we were right here in the market, and I looked at this and I said, oh my gosh. And I looked at it without having done really much analysis on it. I just looked at the picture and I saw this wave 1 up, wave 2 down, and I said, oh my gosh, this is the start of a wave 3. But I didn't know the background to it, so let me tell you what I did, and this can help you in your analysis. What I did, they asked me for a projection for the wave 3. So I gave them a projection, and I'll tell you exactly what I did, and you can do this too. Wave 1 and wave 2. The way to project wave 3 is off of the wave 1. So the first target is going to be, the minimum target is going to be 100% of wave 1, 100%. So I took the high price minus the low price, and I added it to here, and I came up with the minimum target. And then I took the next target of 161.8% times wave 1. So again, we're using Fibonacci here. And I came up with second target, which is somewhere in here. So those were the targets that I gave them, and not knowing that we were going to reach the targets within 6 months, because that's just insane. But this is something that you can also use when you have a nice trend move up followed by a correction. And this is during this period, actually, China had their fastest growth, yet the stock market slowed. And that's because interest rates were kept high. Now, the growth has slowed and interest rates have come down, and they're going nuts. So this is what you can do. You can measure a wave 1 and then project the next move, because all markets move in 3 waves, whether it's 1, 2, 3 or ABC, even before the 4 and the 5. So you can always catch the 1, 2, 3, and you can target your wave 3. Your minimum is 100%, then it's 161.8%. So that's oh, and this is the daily. This is the daily for the Shanghai Composite Index. I don't know how it's going to play out, but that's just, you know, what we've come up with. I can't see how it's not going to go higher, but I think it's going to be higher at a slower pace with some corrections. And if I were to recommend anything, I'd say wait for 10 to 20% corrections before buying it. So I just want to tell you that we're offering, and then I'll take some questions. We have this new service called ElliottWaveDesk.com, and you can sign up and get 2 free weeks of our counting service if you'd like. ElliottWaveDesk.com. It's a new service, and we provide analysis on most of the major currency pairs and the S&P, oil, gold, the dollar index, and we have a fundamental piece, and we also have a weekly video and a trading desk with trade ideas. So we have some real trade ideas. So you might want to check it out and try it out. So are there any questions? Okay, you're asking what my setup is, and they're all, that's our setup. We use moving averages, moving average combination. So those are moving averages, what we use and what we teach. And the pink and the blue numbers on the chart, how are they plotted? You know, yeah. The pink lines are just the 34 EMAs, and the blue, or the green, I guess you saw that it was blue, that's the 12 EMA. So the 34 on the high, the low, and the close, and the 12 EMA. Are there any other questions or comments? Okay. What you're seeing here, are you using FX Pro ECN? No. I mean, what you saw here, what you were looking at, this is Motive Wave. And if you want, you can check this out too. Go to software.fxtradersedge.com and you can get a 2 free week trial to this. This is a paid software. And just so you know, when I had my trading desk, I was paying $2,500 a month for data, like for 25-year data. $2,500 a month. This was in the mid-90s. Yeah, mid-90s, 95, 96. And now data is virtually free. So this is a charting system that we use, and that's what we use. Okay. How high will the US dollar go against Canada? Well, let's see what we're projecting here. Yeah. If this is the final wave 5 up, then it's quite possible that over time we get up to 135. Okay? But I just like to, I don't like to throw that out there. I just like to, I'm living in Canada right now, and I remember when dollar Canada was really, much higher, much lower. I mean, the whole gamut. So it's quite possible if this is correct, then that's where we will go. Okay? what percentage is your personal trading account up or down? Okay, that's a personal question, isn't it? I actually have, because I've written my book, I actually have a few people trading my account that I've taught, and we're doing very well. I'm going to get back to my own trading now, but I have taken a sabbatical from my own personal account, and I got some of my students to trade my own account. So we're doing very well, and in fact, we offer that service as well. So yeah. And if you want to know, like for the last 3 years, the account has done very well, making between a lot between 30 and 80% a year. So quite nice. What's the green line? The green line is the 12 EMA. Okay. Oh, I see you see FX Pro. Yeah, I said I have a demo account for FX Pro here. I'm not using it personally, but I'm using, I just put it up because I was showing some students something. Some of our students use FX Pro because they offer a lot of markets, and they just started to offer futures contracts on there as well as stocks. So that's why I have it here. So I'm going to investigate it further because that's very exciting. So that's interesting because the stock trading platforms are now moving into like stocks, different arenas, and that's really great because it's always good to have one platform which trades everything, where you can look at any market and scan, and you don't have to be limited just to Forex or the CFDs. So now we have the capability of trading stocks on some of these platforms and futures, which is just incredible. Really, really nice. Okay, I guess if there are no more questions, can you go live with any future now? I don't know what you want me to look at a futures chart, like what would you? Why use a 12 EMA? It's not a fib number. It actually is the square root of 144, and 144 is a fib number. You can use 13 if you want. Humphrey, what futures market would you like to look at? Mm. All right. Well, I assume the FX Pro, I don't have a futures, well, I assume FX Pro has gold, but I don't have it up and organized right now. So I can just tell you, if we go back to gold, okay, the gold chart, this is the CFD, this is gold on the Forex trading platform. It's going to be very similar to your futures gold contract. Very, very similar. Okay? And according to this count, this whole move down is sideways and corrective. We had a nice move up. We had a corrective sideways move, and we're looking for another move higher. Okay? That's what we're looking for to complete this wave C. And wave C has to unfold in 5 waves. Now, this is a correction up. See, look, the bigger picture is I'm telling you the shorter move to complete the wave 4. And once we complete the wave 4, we're going to go down again. Okay? So we think up first and then down. Is your charting software up for subscription? The charting software is software.fxtradersedge.com. You can pay, it's not, you pay a monthly fee if you want, or you can buy it outright. You can look it up yourselves, okay? The wavy tunnel, that's our strategy that we use. We teach Elliott Wave Ultimate, that's the program that we have, and we teach Elliott Wave, Fibonacci, Harmonics, and we use the wavy tunnel strategy. So that's moving average system. I'm not going to comment on the Canadian stock market right now because I don't have it up on my charts. And okay. Well, I want to thank you very, very much for being here. I hope you learned something today. Jesse, thanks a lot. And our time is up. It's an hour, so I know you guys have a lot of things to do now. You can always email me if you have questions that we haven't answered, jody@fxtradersedge.com. I return all my emails, Jody, and that's fine. So thank you, Denise, and thank you, Jesse. Thanks very much.